Hi, this is Trudy from Howard Tax Prep, and today I'll be sharing with you how to save on taxes and build up to $77,000 in tax-free money for your child. The good thing about this benefit is if you have more than one child, you can provide this benefit to each of your children. Before we get into the how-to, I'd like to highlight some of the benefits that you will receive. You can reduce your taxable income by up to $12,000 per child. You can provide your children with up to $12,000 a year in tax-free income. The reason this income would be tax-free is thanks to the new Tax Cut and Jobs Act. The first $12,000 of income is non-taxable. You'll potentially lower your own tax bracket. You can save and invest $5,500 annually for your child or your children that can be withdrawn tax-free during their retirement. You can create a nest egg for your child or children that will allow them to withdraw up to $10,000 penalty and tax-free after 5 years for the purchase of their first home. A child starting at age 7 would be able to put away $5,500 for 11 years, giving them $60,500. That is not including interest or any compounded interest. A child starting at age 7 and ending at age 21 would have 14 years to put up $5,500, giving them a total of $77,000. Again, this does not include any interest or any compounded interest. So how does one take advantage of all these benefits and get started? Well, step number one, you need to start a legitimate small business. So according to the IRS, the definition of a business is generally an activity qualifies as a business if it is carried on with the reasonable expectation of earning a profit. I must stress you do not want to start a fake business for tax benefits. Also, per the IRS, an allowance for doing chores is not considered a job. So what are some examples of a business? Your business could be investing in real estate, selling items at a flea market or online, baking cakes, selling jewelry, consulting, insurance sales, selling weight loss products, supplements, sewing clothes. Your opportunities are limitless. Do I have to be an LLC or corporation? No, you don't need to set up an LLC or corporation to be recognized as a business by the IRS. However, the entity that you create will determine if you'll have to pay employment taxes or if the earnings will be exempt from employment taxes. Step 2. Employ your child. Create a job description that clearly outlines duties. You wouldn't want to say, Billy helps run the office without giving details about what Billy does. Set a reasonable wage for the position. Paying $100 an hour for paper shredding wouldn't be considered reasonable. However, if you pay the current minimum wage rate, that would be considered more reasonable for a paper shredding position. If you only want to pay the $5,500, which is the maximum contribution for a Roth IRA, you would pay your child roughly $459 a month or about $115 a week. You must collect the appropriate employment paperwork. Hire your child or your children into the business and have them complete age-appropriate tasks. While your child may be a genius, having a 10-year-old holding the position of accountant just wouldn't fly with the IRS. Depending on the age of the child, jobs such as paper shredding, filing, counting inventory, grounds maintenance, janitorial work, etc. would all be considered age appropriate. Just so you know, the IRS has recognized children as young as 7 as being able to work for their parents. Step 3, audit proof your deductions. There is nothing more disheartening than having the IRS deny your deductions and having to pay taxes on all of your income. So, how do you audit proof the hiring of your child? You begin with having solid paycheck records. Whether you do payroll electronically or if you do it manually, you must have proof that your child received payment from your business and cashed a payroll check from your business. You also need to have solid documentation of work hours and the days that were worked. You will need to have an age-appropriate job description for your child or your children, and you must remember to meet state and federal child labor laws. Every state is different, so this is very important in making sure that you're in compliance with not only federal laws, but also your state laws. Don't hire children under the age of 7. So now that we've gone over the benefits and the steps, let's talk about some additional tips. Suppose you don't want to start your own business. Your child can still participate in a Roth IRA if he or she starts their own business. You won't receive the tax deductions, but the child still reaps the benefits of building a tax-free retirement income. Some business ideas for children would be babysitting, snow removal, dog walking. They could do landscaping, car washing. They could be an errand boy or errand girl. You'll get the idea. Wages can be contributed to a Roth IRA even if the child does not earn the wages working for their parents. If your child does work a job and federal taxes are being withheld, the child can file a tax return requesting a refund of taxes paid. So now that you've learned what you can do, your next question should be, well, how can I get help in setting up this wonderful plan for my children and my family? Howard Tax Prep can help you with your payroll, job descriptions, employment paperwork, the creation of a Roth IRA, and any electronic time capture and documentation. You can call us nationwide at our toll-free number 855-743-5765. If you're in Illinois or Indiana, you can call us at 708-529-6604. If you prefer email us at info@howardtaxprep.com. You can always visit us on the web at www.howardtaxprep.com. Also, check out our social media, Facebook, Twitter, and Instagram at Howard Tax Prep. We hope you've enjoyed this presentation and thank you for your time.